Very well. It appears another session of the FX Street Tokyo Open Live Room is about to start. So welcome everyone. I'm opening the chat right now, and then we can actually start. Good afternoon, good evening, and good morning to everyone. Let me try to open the chat, and I will see who is in the chat. Welcome to this new session of the FX Street Tokyo Open Live here. And as you know, this is a daily show where we feature real trading at the very heart of the Asian session. With me, I'm Giuseppe Basile, also known as the FibStalker. And thanks for joining today. This is the new FX Street show daily from Sunday to Thursday from 8 p.m. EST to 9 p.m. EST. Thanks a lot for coming in. We have a few fellas here. Thanks for joining in. Lucas, Greg, Scott, Kerry, Marco. We have Jake, Jax. Thanks for your Twitter, Jax. I could not answer that question, but I'll do it now. Gold is actually moving higher. Scott. We also have Roland, Adinda, Desi, and I want to take the chance to thank Desi, who every day is preparing this show for all of us. Thanks, Desi. Flash, we have Fame on, FX Ambassador, hello, Marco Graham, what happened, Lee, BW. Thanks a lot for joining in. I see there is a nice discussion here going on. Before we get into the charts, let's talk about risk. As you know, trading is all about risk. It's a business, and it's all about risk. If you learn to manage risk, you'll be ahead. And on this, you have to believe me. Trading Forex and its derivatives, futures, options, and CFDs, and other instruments with retail off-exchange transactions involve substantial risk of loss, and it's not suitable for all investors. You may lose all or more of your initial investment because, especially in Forex, there is leverage, and leverage can work for you as well as against you. It magnifies gains as well as losses. Past performance is not necessarily indicative of future results. Please also review FX Street risk disclosure on the website. That's very important. The information, including the commentary, trade ideas provided in this webinar, should not be relied upon as a substitute of extensive independent research which should be performed before making your investment decisions. All the information I'm giving here, the material and the ideas, are for educational purposes only. Feel free to paper trade them. I, Giuseppe Basile, FibStalker Consulting Incorporated, and FX Street will not be responsible for any losses incurred on investments made by attendees as a result of any information in this webinar. All right, so I know you know that. It's very important we keep that in mind. I know that some of you are experienced, some of you trade real money. It's your own business. I'm going to offer an analysis here. Hello, Pantelis, welcome. And all right, so before we get into the chart, let me just say hello to everyone. I'm here. Hi, welcome back. And I want to invite all of you in New York on Monday. I'm going to represent FX Street at the New York Traders Expo, organized by the same company, organized Money Show. It's one of the biggest, probably the biggest trading fair in the world, and it happens in New York. I'm going to present the FibStalker Methods as well as my FibStalker Consult. So stay tuned, and I'm going to share that on FX Street as well. So let's dive into the charts. That's what we are all looking for and waiting for. So let's see and what's going on here. I mean, it's shoot your market, and we're going to review everything today. So hi Kerry, hi Marco. I took that gold yesterday, pretty good so far. Very well. I suppose that was a long. And you will see that there are some levels that came into play here. And the notable one is, look at that beauty, 110.80. Look at the beauty. And it's not a case that we had a bounce there and we had a finish trade there as well. All right. So that is good day all. I see there is a nice a nice discussion going on here. Very glad, and I'm not. So just just good morning everyone, and let's get into it. We have yen crosses, the pound versus yen and Kiwi. So Greg is saying, got it, very well done, Greg. The opportunity came right at the open at the US Summit. That's why it's important to always follow. And let's have a look at that then. This is one of the two levels that we mentioned. Now, if the euro starts from here, it could start the move from 1 to 122. Okay, it could start here, believe it or not. So talking about 1,000 pips. Now, I believe that eventually we're going to get another 50% retracement. But, the setup was here, 110.80. I told that with probably 3 to 4 days in advance. As you can see, these levels are real, and we know them in advance with a few days in advance. So maybe we can actually watch our opportunities here and have a look at how the market behaved here. During the morning, it was around a little bit after 9. We had the test at 9 here, and just a little bit after it, there was a break of the sequence of measure move on the 15 minutes, and the market offered a fairish trade here. So will the market continue higher? We don't know yet, but as you know, our job as trader is to actually generate fairish trades. Jax is saying closed New Zealand dollar 6708 from 6561. That's a sizable trade there, Jax. I mean, it's 140, 150 pips. So congrats. This market has actually. Let's have a look at that. This market is still in a long. So yesterday I've suggested to keep this trade, but obviously there are always. And that's obviously will be for a swing, will not be for a short-term trade. So if that was your intention, that's good. Congrats. And this market is actually. I believe this market can continue higher. Besides everything, and there's a swing trade. Yesterday, I actually suggested that this market could actually go higher into that 68.50 area. So in any case, I mean, it's a good trade there. Currently 66.24, so it's not too bad. Just let me take some notes here. And this is New Zealand dollar, US dollar. All right, so of course, yesterday we were all scared about the US dollar, Canadian dollar, and as I mentioned, I never get scared, because this market went very, very close to the low there and the stop, but didn't pierce that level. At least they didn't do it yet. We don't know whether it's going to do that or not, but we can say that for now this market is out of the woods. And again, it's getting participation into this area, as we saw on Monday. There was that bounce from that level. Yesterday, so 2 days ago, we saw that that big move. That was yesterday indeed. We saw that big move lower, and today the market had reversed. That it's now apparently continuing. So we still have participation into that area of support. That's why it's very, very important to trade the level rather than trade our assumption and beliefs and ideas that we might have about we might have about the market. We have to try to stay always objective. Now, before we get into the US dollar Japanese yen, which is the other market that we are obviously following closely, long US dollar, Canadian dollar now, Jax now might be a little bit late, so be careful with that. Marco, I entered the euro paper. Very well done, Marco. The opportunity came just at the US Open, and US and European Open are the most the most important session in the markets, of course. So when we look at the US Canadian dollar, this market is actually now moving back up. We don't know whether this market is going to how this market is going to fare here. And it is not impossible to see this market back into 138.60 here. So if you have a long in this market, you are short termed, that's the level, the area where to take profit. I get in at 136.75. Okay, so you got in before, not now. All right, so let me see. Let me see the level there. It's 137.64. So you got around the lows here. Very well done. Excuse me. Very well done, Jack. So I would keep that trade. That's a very good trade, and I would keep a very good position. Not only a very good trade. I mean, to me, I'm interested in keeping this kind of position for some time, as you have imagined. So very well done there. Hello, Joe. Let's see who else has joined here. So we have Jax, Roland, Pantelis, Jason. Hi, Jason. Flash, Lucas, Greg, Femome, Kerry. Hi, Kerry. Scott, thanks for your contact. Marco, Graham. What happened? Lee, BW, and FX ambassador. So there are some other people that for some reason I don't see on the list, but then I see the messages. Hi, Kerry. So again, the US dollar Canadian dollar. It's good to keep this trade. We're still within this area of potential participation higher, and you never know how this market might move. So whenever you have the opportunity, you have to participate. Yeah, that's very, very important. And let me take a note here. The New Zealand dollar that we mentioned before, this market, as we know, it's actually very, very bullish at the moment. I gave a very good entry. See if I have it here somewhere. And it's not one of the market that I actively trade. However, this market has been trading longs. And this gives me also an opportunity to answer Jack's tweet today. Thanks a lot, Jack, for that tweet. And Jack's had a very simple question. Yesterday I spoke about the path of least resistance. What is this? And it's very simple. It's the most probable direction that the market can move given a specific time frame. Now, the beauty of analyzing the market using the FibStalker methods and the footprints of algorithms is that a market might have a preferred direction in one time frame and have a totally and have an opposite direction preferred in a higher or lower time frame. So depending on where you are, you have to assess whether the market in the time frame you are trading is as a path of least resistance in the direction of your trade or against your trade, because this changes completely the trading plan as well as the outlook for that trade. So that's very, very important. Now, generally, what I do, I try to not trade against the weeklies. And although sometimes I find myself, and I'm happy to take counter-trend trades, which actually are trades that are, for example, on the daily or on the 4-hour, are counter-trend trades when we consider the larger time frames, so the weekly, but are trend-following trades within those time frames. So sometimes when there is enough room, I will take those trades. But enough room, it means that there are days, few days, or one day on the 4-hour, or few days if I trade on the daily, equivalent of room for price to move. All right, so I never find myself trading directly against the time frame that is just higher. For example, if I trade the daily and the weekly is telling me, if I want to trade the daily long and the weekly is telling me short, I won't trade the daily. But if the 4-hour is saying long into a level of potential resistance from the daily, I might take that trade. So it's very, very important we understand how algorithms are placed, I call it trend placement, how algorithms are actually positioned on each time frame. For example, if we go back to to the to our US dollar, Canadian dollar, we know that weeklies are positioned on the long side. So every trade on the short side, even if it might be, convenient and nice, and you have a big move, trending move like the one that we had yesterday here, this long red bar here, you might find yourself trading against the larger time frame. So you do that at your own risk, okay? And I suggest you don't do that at all. All right, so that's Jax. It's a short answer to your question. There is the long answer, and I give long answers and all justification and all the techniques and procedure to identify the path of least resistance and how algorithms are positioned in each time frame in the FibStalker Methods coaching program. So again, if you want to get a better understanding and a full understanding of how modern markets moves based on the models or algorithms that model algorithms, that's the best way to get an answer. So I hope that was. You're very welcome. And that's the short answer. Okay, that was the short answer. The long answer, it's a complete answer actually, but I think that gives you an idea of why sometimes we don't take the trades and why sometimes we want to take the trades, and sometimes when everything seems perfect, we avoid the trades. Okay, and it's all about trading. It's a business. It's all about selecting. In fact, I say the process of analysis and the overall trading processes, and I would define it an exclusion process in which you exclude opportunity. There are plenty of opportunities in the market, but the job of the trader is to exclude, is to separate the good ones, the ones that have the highest probability of generating a first trade, from the bad ones. And if you make that mental shift and you get into this kind of thinking, that you have to filter out and take into consideration only the best opportunities, then your outlook changes completely. And let me bring something to your attention. I've already mentioned this in the past, but let me say that again. Whenever that's correct, and Jax is saying it's easier said than done sometimes, and that's correct, Jax. And the problem is that the majority of traders, and actually the 95% of losers, consistent losers, because these are the numbers, do not have a reference, a model that provides a reference of whether and when a level is significant or not. And I believe that's the major problem then. And even when let me continue on this, and even when you have that level, the level might hold temporarily, and then maybe might not hold after that. And that's why though these levels are taught for capturing potential inversions, but most importantly are taught for risk management, because whenever you get a bounce, you get the unique opportunity to get a finished trade. And when you have done that, you don't have to ask any longer what the market could do. You should never ask that question, because asking the question what the market will do has only one answer: I don't know. And you have to create your trading system and your trading method around around the fact that the market can do anything. All right. So in reality, the only opportunity we have is to identify level that gives us, with a high probability, risk-free trades. After that, we have to leave the market do whatever it has to do. And simple enough, and I would say, Jake, not only simple, but also procedural, so that you always repeat the process the same way. And that's one of the things that I stress also with my students. And initially, when you look at the procedure, initially it doesn't make sense, and then when you repeat it again and again and again, you see that the procedure, for example, FibStalking timing, which is a proprietary technique to actually time these levels. It's something that when you repeat it again and again and again, I mean, it becomes almost second nature, and you wouldn't do anything else after that. So so this specific case here, I mean, I want to stress this point because some people, because they don't understand the philosophy behind these levels, right? They say, okay, it bounces, but then it didn't hold. It didn't hold, right? It hasn't held, and the level. But and my answer usually is, what do I care? Because the only purpose of these levels is not to predict the future, but to predict a level where a free risk trade can be given, and that's it. And when I do that, I've done with my job. I pat myself in the back and I said, I trade that in the best way I could. All right. So now, if this moves goes higher into the first target, this is a fantastic trade. On the other hand, right? Because now you got a free trade here, and you just forget about this trade. Now, if he gets into 115.20, this trade will remind you that if you take opportunities around those levels and you obtain a free risk trade, this becomes a huge opportunity here, and you just have to forget about it and just wait and see if the market gets into target. Okay, and Greg, it appears that Greg agrees with that. I can vouch for that. Thanks a lot, Greg. And all right, so this was not true. And again, when I say these things, it's not true. It's just my opinion about trading, and it's not just an opinion. These are consistent and continuous observation I've been doing the last 5 years, and that's I'm proponent of looking at the market like this. Now, it doesn't mean that you cannot integrate this view with other views that you might have. The problem, though, is that whenever you try to join two different systems, you have the same problem that you face when you want to reconcile two indicators. And it's always very difficult to reconcile indicators, because to reconcile indicators in a scientific way, you would need to study all the possible cases that price can give to you and the indicator can give to you, as well as all the possible combinations. Now, tell me, how many people have the patience and the discipline of looking at potential tens and tens of combination only with one indicator, between one indicator and price? Because that's what we are talking about. And very often, you see charts that are very, very busy with 2, 3, 4, 5 indicators. And mind that indicators can be of different nature. Can be also lines on the chart. Even horizontal level are indicators, because you have rules that you use in order to trace those levels. Now, if you want to replicate success, you want to replicate profitability, and you want to be consistent, you need to know exactly what are the rules that you applied to create that horizontal line in those specific market conditions. So what I tell you is good luck. And I know that there are some people who did the hard work of trying to understand that, and my hats off goes to them. But the majority, unfortunately, never does this exercise. I believe. All right, so let's get into the US dollar Japanese yen. That has me a little bit worried because we might have seen the tops here. Now, before we cannot have the guarantee here, but clearly, if the euro has seen the bottom, and this is very possible, the US dollar Japanese yen will continue lower from here, which is not ideal, I would say, at least, because we need to puts us in a situation where we have to trade an extension short if this market continues lower. All right. Now, that said, there is already the opportunity in the euro dollar. There will be other opportunities as well. So I'm not worried. I still believe that this 116.33 is possible, and um, the market can actually keep moving lower. Now we will wait before before making that statement, and we will wait to also to get a confirmation from other markets as well. For example, the SP 500, gold and silver, and so on. Jake is saying indicators are too subjective, hard to write a trade plan around them. Well, let me respectfully disagree on one point. Indicators would be very, very objective if one would have the patience and discipline of evaluating them in full detail. And the reason why I say that, Jake, is because indicators are no more than tables, data tables, statistical data tables that actually translate a price or a sequence of price in a number, and that's it. So they are table of hard data. They are statistical table that describe price and a portion of price history. So they're very objective indeed. I mean, if one analyzes them in a subjective way, I agree with you, they are subjective. But indicators themselves offer an opportunity to be analyzed in a very objective way. And the reason for that is if you table the value of an indicator for price data series, that's very objective. These are numbers that you have to analyze, though. And that's where the majority falls, because even a simple indicator, like a stochastics, for example, has actually so many combinations that if you do not understand and study all of them, the problem is that the same combination and the same values, the same indication given by crossovers can present in different market conditions. So that's when understanding the sequences that are in place on different time frames can help input that data in context. And Jack continues, hard to write a trade plan around, never found one that fits all circumstances. And that's correct. That's absolutely correct. There is, and that's the reason why, indicators, I mean, I don't use indicators, as you can see, obviously, but indicators are only statistical tables on pieces of data history. They don't say anything about price itself. Indeed, they are derived by price. And now, if you want to use something that is derived by price, right, to get decision, why don't we get directly to price, to the source of that information? Because anything that we derive from that information, it's a derived information. So it's not going to give us an edge. And the main problem, it's always a problem of conflict of interest anyway. All right. So let me tell you a story. And this story justifies why I dedicate my time to retail traders. And in the past, I had the opportunity to work for a big institution as well. Now, I've been living in Ireland for almost 4 years, between 2006 and 2010. All right, and when I was there, I was still an IT consultant, and I was working for Accenture. I was a project manager and technical architect for Accenture, and actually, I had the opportunity and decided to start a master's in finance. And that was exactly the period in 2008 when all the problems with the CDOs and all this garbage was coming out. And I was so disgusted by the industry, believe it or not, because it is disgusting. I mean, if you consider that, investments are to better the life conditions when you have less opportunity or possibility or strength to produce an income, then the excesses of those years have been really, I don't know how to define them. I don't want to define them. But at that time, I took my decision. And what struck me, and this is very important because we have to put this in context of our own trading. All right. What strikes me is the fact that when I started this master's in finance at the University College of Ireland, the National College of Ireland, do you know what's the very first discipline and topic that you study? Guess what is that? The very first topic that you have to study, it's ethics. Ethics, right? So if in an industry, the first thing that you learn is ethics, it means that in that industry there are so huge conflict of interest. And I don't want to go into this peep talk, but this is something that is very, very important to me. So this industry is characterized by conflict of interest. If you do not understand Guinness, yeah, Ireland, and if we do not understand that this industry is full of conflict of interest, we always come out losing, because if there are conflict of interest, then this industry has no interest for retail traders to understand how the game really works. Okay, and my effort goes always in that direction to try to help retail traders this time, because no one does that. Whoever has the opportunity to work for the big companies, that's what they do, to try to level out the game. And actually, as retail traders, we have some advantages that big companies do not have. We have some other advantages as well, because we can only follow, we cannot make the market, we can only follow the market. But as we are small and we can be very quick as well, we can be very responsive, and if we know what we are doing, we can do just as good as big company. I would say that we can do much better than that. All right, so let me close this little FibStalker peep talk here on retail trading, and let's go back to the market. So Mark is saying, well, trend is our friend, but measured moves are more. Well, I mean, when they work, yes. So all right, so someone has mentioned silver and gold, and I also give me a yes if you got into gold. Someone has mentioned that. I cannot recall who mentioned that actually, but if you actually did that, give me a shout here, and let's review this market. By the way, FX Ambassador Ahead suggested Kiwi. We reviewed that. Yen crosses. We reviewed the US dollar Japanese yen, which is the leader. And let's have a look at the pound versus Japanese yen, which actually it's something that it's moving as anticipated. It's moving like the US dollar Japanese yen. It's a little bit more aggressive, but it's basically moving along with that market. And Scott, I believe, is the one who actually entered or had some interest in gold there. Well done, Scott. Now, going back in a minute here to pound versus Japanese yen, this market is moving lower, and we knew that. The point is, we don't have an edge again at this level. So even if this market keeps slipping lower, on this particularly on this time frame, there is no edge. So we need to move into the 4-hour time frame and start seeing a structure there, because the structure, as you go down in the time frame, the structure always emerges. Okay, the structure emerges, and there is a possibility and to actually study the structure there. For example, this level here, it's not random, and it's probably a 50% level that has traded where the market went to trade again before continuing lower. So on this time frame, it's clearly there is a sequence of moves here that is pushing this price into 160, which is near previous lows. the projected target for Euro Japanese yen. So this is the projected target for pound versus Japanese yen. Let's have a quick look at the Euro versus Japanese yen. And this market is obviously in the same move here. And we talk about this market. When was that? It was. I think last week we mentioned this or the week before, and then we left it. We left it where it is now, and this market is continuing in its sequence of measured moves lower here, and it has a target below. Where the target is, we have to see on the weekly time frame. We mentioned this level. We mentioned this level in the past, and we have a lot of lines here. Let me remove some of them. But we mentioned this level in the past, right? So this market is actually pushing towards that 122 there, and the most immediate target is going to be 123.60, but this is gonna move lower into 122. All right. The Barclay reveals the trade of the week: sell Euro Japanese yen. When was that? When was this posted? So let me look at the date here. This was posted February the 16th, okay? And today is February the 18th. So with all the respect to Berkeley, but they're telling us to trade short, right? This market basically here when they probably short it here, right? And I'm not sure if Berkeley short it here or not, but I'll be very surprised if they didn't short this market before. So I'm not necessarily saying that Barclay is putting out this information to mislead people. But let's be very honest, guys. This is not a place where to sell this market. You want to sell this market where there is going to be participation. You don't want to sell this market when they're almost close to their first target there. Okay, so this is a very good example. Thanks for bringing it on, Lucas. It's extremely good example of the level. I wouldn't say manipulation. I'm not sustaining that. I'm just saying that from an objective point of view, this market is at lows, right? And that in the past I've mentioned, if you see a move and you're not in it, the move has ended. And this move has not ended yet, but it's very, very close. So this would not be the best place where to sell this market. So basically, they were suggesting to sell it basically at lows. On Monday, this market was at lows, right? Well, so the 16 was the 16 was this level here. Okay, was this level here. So let me rectify. Sorry, Barclay. Let me rectify. So although again, although it's a lower, it's too of a low level here, because we want to study the market and see where there are opportunities to enter, right? So although this is still a very low level, and I would never sell here, I would only sell here in the context of this move that is already in place and in a smaller time frame, because that level has a meaning, and it's a 50% retrace as well, which is this one. Okay, the point is, in the context, you have to put things in the context. This is not a short in the long term. If you see it as it is now, it's a short only for the duration of the first target below. Okay, so very, very good point here, and let's hope this helps Jason as well. But these were my consideration on this. All right, so What is the projected target for pound, yen, and kiwi? Kiwi, we have said that already. FX ambassador, we have said that already. There is a potential for 300 pips on the New Zealand dollar. Whether you believe that the New Zealand dollar should trade against US dollar, Canadian dollar or not, that target is still there. We have already mentioned that. And that's the 68.50 level, right? That's the long-term target for this swing trade. There is a much longer-term target on the weekly time frame, but I mentioned that as well, and that would be the 78 level. Okay, in the short term there is a 68.45, 68.50 level. All right, that's for the New Zealand dollar. For the pound versus yen, we already mentioned that as well, and that's 156.40. That's the longer, the projected target for pound versus yen, and that doesn't change. FX ambassadors, it's always the same. All right, so we mentioned silver and gold. So let's have a look at these markets here, and this market is actually it's trading it's trading in extensions, and I think that this market is using a higher extension here. There was a participation at that level, and as we can see that this market more than offered a risk-free trade here at the 1196, 1197 level here. And that's the kind of trades we are interested into. That's the kind of trades we want to look at. Just let me take a note here on the other market that we touched upon and spoke about again the targets of New Zealand dollar. And so very well done, Scott, there. Now, this market has shown price action that I believe even if 1197 is retested, we're probably going to see a continuation higher for the kind of action that there's a pattern, a FibStalker pattern that has been triggered here that tells us that this market should hold the next retest. Of course, we never consider that blindly, but we want to see again the FibStalking timing providing confirmation. And the silver is obviously behaving in a similar way. Here a little bit less determined here, although it has traded an extension there, as we can see here. So I would actually use gold as the lead here, and this market is going to follow anyway. So this market is putting the traditional traders would we call this cap and handle, in which the handle is happening a little bit below the high here, but this would still be a valid formation here. All right, and of course we have. Let's have a look at dollar index. We didn't have a look at it recently. This market still has 94 as a potential level to be tested, and clearly traded an extension here and still within that extension that is going to press this price lower into that 94.50. Okay, so we will see whether this market is going to push lower into that level. If that happens, we might have seen the bottom of the euro dollar and the top of the US dollar Japanese yen, which is a little bit unfortunate, but it is what it is. And then we have and let's not forget that we have to put this market in perspective. Okay, and the perspective is that there is a support in the 94.50 area here for this market. It's not a traditional support, but it's an area of participation from algorithms, which for me it's even more powerful. Okay, and we saw that market bounce 6 times out of the level, and the 7th time is gonna, I believe, gonna play very, very soon here. Okay, any other questions in relation to this? Would you please review the pound versus Canadian dollar? I will definitely do that. And I just want to have a quick look at the SP 500 here, and remind all that this market has now started moving in extension on the daily time frame. And we are going to, if it comes lower, we're going to see a retest of the 1890, and that will decide whether this market continues higher or it ends here, and it then breaks the 1800, the 1797 level, which is our key level. If that level breaks, I'm afraid that this market is basically done, and then probably we're going to see start seeing a sequence of measured move on the downside. And that would give us a great opportunity to ride this market on the downside if that happens. Okay. All right. So the pound versus the Canadian dollar, it's a market that actually has. Let's look at this market on the weekly time frame first to get the full picture. Otherwise, we risk we don't get the real picture. And let me see what has traded in this market. So this market has recently pierced, has actually broken the sequence here. And actually that happened when that happened. That happened this week. So this is certainly a market to follow. Okay. So this week, this market has failed an important sequence that it was holding. Can you see the participation that we saw at 198.22 here? The market continued higher. So the weekly have participated in the level and pushed that market higher, right? And now the weeklies have lost this market. And this is a very important development in this market. And that happened on Tuesday. On Tuesday, the weekly have said, we are not interested in pushing this price longer anymore. Now it's up to you. And now we could, again, we could see, a reaction higher, and then the daily who wants to short this market will have free hand, because there would be no weekly trying to stop them. So the path of least resistance to continue the answer to Jack's there is that the path of resistance is down now, and any move higher, it's a counter trend in this market. Now it can be a profitable counter trend, especially if you're on a small time frame, but still it is a counter trend. Okay, Mervi, unfortunately we won't have time to review the pound versus US dollar, but I promise you that on Sunday we are going to review it. Okay, so I ask you to be patient with that one, and we are going to review that on Sunday. That said, I would like to start. I would like to start a summary, a recap right now of what we have discussed so far. So we have reviewed the euro dollar. We started from the euro dollar, and actually we noticed that the level that we gave with 4 days in advance, this 110.80, came into play at the US Open, and it gave a free trade. So congrats to all of you who have traded this entry here. This market has the potential to go into 115.20. That's the target that this market can have. So if you have entered this market at these levels, and if you are willing to give back to be stopped out at break even in this market if this market comes back and breaks that low. If you do that, if you're ready for that, and you should be ready for that, because see, if this market moves below that level, has the potential to give even a better entry for longs. However, I think that there is a possibility that this is the low for this cycle for this market. So the target that we can see is 115.20. If you are a swing trader, or if you look for big rewards in this business, my suggestion is that you wait for 115.20. Okay. We then reviewed the New Zealand dollar, US dollar, and I've been asked again, what's the target for this market? The targets do not change from one day to the next. And the target for this market is still the target that we gave yesterday and 1 week ago. In fact, we could project this target 1 week ago, more than 1 week ago almost, because we waited for this market 1, 2, 3, 4 days, 3 days to get into the level that was known in advance. And the target is also known in advance because the target is still 300 pips away. So 68.50 is the level that you want to look at. If you exit before, fine. It depends on which strategy you use. How do you take your profits? It's your business. My business is to try to get these bigger moves. The US dollar Canadian dollar seemed desperate yesterday, and you can see how very quickly things can be turned around when markets are on top of important area of support. And this market is on top of the 137.80 level area of support. It has challenged the low, but has not broken those lows. So I still have those two positions on, which I still believe I can bring to 1.58, believe it or not. And you may call me crazy. You can call me however you want. Those are not the only trades that I'm gonna bring to target. There are other trades that I'm gonna bring to targets, and there are other trades, small trades, I'm gonna take in the meantime. But whenever we are on top of an area of potential support, don't fight that area. You do it at your own risk and danger. Okay. So this market now for the second day, the day of tomorrow, of Thursday, if you wish, has already started, and is pushing this price higher. All right. So that's what we have to anticipate for this market. We then spoke about the pound versus the pound versus the yen here, and again we mentioned that the market is a bit more aggressive, bearish in a way compared to the Euro-Japanese yen, and we know this is the Euro-Japanese yen. The market that I wanted to comment on is the pound versus Japanese yen. We know this market has a 156.40 target, and that's where this market is going. Now, the fact that this market is going there also gives us an indication there are only 500 pips to go, while in other markets like the US dollar, as a Japanese yen, we have more than the double of that. Okay, so I think it's sensitive to try to capture the moves that are more significant. We then quickly review the dollar index, mentioned that the 94.50 is still a level. This market is trading extension shorts, and again we touched also on gold and silver that have traded their extension, particularly silver has traded the extension, gold has traded a jumping extension. And if you want to learn more about jumping extension and anchors, jumping anchors, again, the FibStalker method is a good search for that. We also mentioned that probably this market, gold, if it tests the lows here, is going to hold them, and this is one of the patterns, the FibStalker patterns, and mentioned quickly also the SP500. Okay, and we say that the SP500 is moving in extension long daily. It could be a counter trend move into a short that has already began. and the next level of support is going to be 1890. That's the level where we could see the next bounce, which means that even if this market starts moving lower, it doesn't mean that it has changed its direction. And finally, I was asked to review the pound versus the Canadian dollar. Very important development yesterday. That long bar is actually decreed and demonstrated the complete total lack of interest from weekly players and monthly players in this market long, which are not going to step in to support this market. Which means that any move that you are going to see in this market in the long side is going to be temporarily and not supported by not supported by the weekly. So anything, it's as soon as the daily is, they're going to come and start selling this market. The weekly will not step in, and we will see a sizable move lower. All right, so this is it for today. I want to thank you for joining me today in this show. I'm Giuseppe Basile, also known as the FibStalker. I thank you for joining in today. I hope you appreciated the information, the review, and I deeply in my heart hope that this information can be useful to you to take some good trades this week, or take profits, or prepare for the trading tomorrow and the opportunity in the coming weeks as well. And for any of you who will be around New York or in New York on Monday, don't lose the opportunity to pass by and say hello. I'll be very happy to meet you and share a chat. And thanks a lot. And I'll see you on Sunday evening then, which is going to be our next, the start of next week. It's going to be very exciting and with a lot of great opportunities. Thanks a lot, and have a great day. Bye-bye now.